My name is Eleanor Voss. I'm 66 years old. I spent 32 years underwriting commercial loans, and in those 32 years, I turned down more bad deals than I approved good ones. So when my son slid a business loan application across my kitchen table and asked me to co-sign it, I didn't need a calculator. I needed about 4 seconds. The projections were wrong. The vendor was wrong. The math didn't breathe. I smiled at my daughter-in-law, told her I'd need a few days to think it over, and the moment their car pulled out of my driveway, I picked up the phone and called a woman I hadn't worked a case with in 3 years. Rita Alvarez. Former branch manager. Best forensic instincts I ever trained. Rita, I said. I need you to look at something with me. Off the books. She didn't even ask why. She just said, bring coffee. What we found wasn't a business plan. It was a blueprint for taking my house. Welcome back to Gia Mom Stories, where mothers share the moments that tested everything they built, and the quiet precision that carried them through. If this one hits close to home, subscribe and drop a comment below. Eleanor Voss. 32 years at Heritage Trust Bank in Millbrook, Ohio. I started as a teller at 24, moved into commercial lending by 29, and by 45 I was Senior Vice President of Commercial Lending, sitting on a credit committee that decided which small businesses in 3 counties got funded and which ones got a polite letter explaining why not. People think loan officers just say yes or no to numbers on a page. That's not the job. The job is reading a business owner's whole life through their paperwork, their tax returns, their vendor contracts, their bank statements, and knowing, usually within the first 10 minutes, whether the story they're telling you matches the story their numbers are telling you. Most of the time it does. Sometimes it doesn't. And when it doesn't, somebody is lying either to me or to themselves. I approved loans that built the hardware store on 5th Street, the dental practice out on Route 9, the little Italian place that's been feeding this town since 2003. I turned down men in good suits with terrible spreadsheets and approved women in work boots with immaculate ones. I learned that confidence and competence are not the same thing, and that the people most eager to skip past the details are usually the ones with the most to hide inside them. I retired 3 years ago at 63, after 3 decades of reading numbers for a living. My husband Gordon retired the year before me. 41 years as a CPA at a firm 2 blocks from my bank. We used to joke that between the two of us, nobody in this town could hide $1 if they tried. Gordon does the crossword every morning at the kitchen table, the actual newspaper, not his phone. I still wake up at 5:45 out of habit, even though there's no branch to open anymore. We paid off this house 11 years ago. 3 bedrooms, a maple in the front yard. Gordon planted the year Derek was born, 34 years ago now. It's not a big house. It's not a fancy one. But it is entirely, completely ours, free and clear, the one asset in our life with no bank's name anywhere on the deed. I bring that up now because it matters. It's going to matter a great deal in about 20 minutes of this story. Derek is our only child. 34 years old, owns a small landscaping and hardscaping company he built from a single pickup truck and a push mower when he was 22. Steady work. Steady hands. He's Gordon's son through and through, methodical, a little too trusting, uncomfortable with conflict the way some men are uncomfortable with heights. He married Vanessa 5 years ago. City Hall wedding, small reception at the VFW Hall because Vanessa said she didn't want a big fuss, though I'd learn later that wasn't really true. She wanted a big fuss. She just wanted somebody else to pay for the fuss she actually wanted. Vanessa Voss, 32. Grew up outside Dayton, one of 3 girls raised by a single mother who worked the register at a discount grocery chain for 26 years and never once got promoted past assistant shift lead. Vanessa has told this story at holiday dinners more than once, always with the same ending: "I am never going to live like that." I remember the first time she said it, I thought, good for her. Ambition isn't a character flaw. I built a career out of ambition. I didn't understand yet that Vanessa's ambition and mine were different animals entirely. Mine was built on proving I could do the work. Hers was built on proving to everyone watching that she'd already arrived, whether or not the arriving had actually happened. She'd worked front desk and sales roles at 2 different gyms over the past 6 years, good at the job, well liked by clients, restless in it. 18 months ago she started talking about opening her own studio. Not a regular gym, a boutique strength and recovery studio, she called it, the kind with infrared saunas and a merchandise wall and an Instagram aesthetic before it had a single piece of equipment installed. She called it Cosign. She had a logo before she had a lease. I want to be fair to her, because a woman who was only greedy wouldn't be nearly as interesting, or as dangerous, as the woman Vanessa actually is. She is smart. She is genuinely good with people. Clients at both gyms she worked adored her. I know because I met 2 of them, once, entirely by accident, at a farmer's market, and they spoke about her the way you'd speak about a favorite teacher. If she had walked into my old office with a realistic business plan and asked for a loan on her own merit, I might well have approved it myself, 20 years ago, on her merit alone. What she couldn't do, what her credit history wouldn't let her do, was borrow the money without someone else's name and someone else's collateral standing behind hers. I remember a conversation with her early in the marriage, the 2 of us alone in my kitchen while Derek and Gordon watched a football game in the other room. She'd asked me, almost shyly, what it had been like sitting across the desk from people asking for money. I told her the truth, that most people who walked into my office weren't trying to get away with anything. They were scared, and hopeful, and asking a stranger to believe in something they'd built with their own hands. The ones I remember best, I told her, were the ones who showed me their real numbers even when the real numbers weren't good yet. Because that told me they'd tell me the truth about the bad years too, once the loan was funded and I wasn't watching as closely. She'd nodded along that night, thoughtful, and I remember believing she'd understood exactly what I meant. I think about that conversation often now, and wonder whether she understood it perfectly well and simply decided, somewhere in the 2 years that followed, that it didn't apply to her. That's where Gordon and I came in. Or more precisely, that's where our paid-off house came in. Derek's landscaping business does fine. Comfortable, not flush. Enough to support a family, not enough to bankroll a $250,000 build-out on top of it. When Vanessa first floated the studio idea at Thanksgiving last year, I asked, gently, how she planned to finance it. She said she was exploring options. I know now that exploring options meant she had already been rejected twice, once by her own bank, once by an SBA lender, and had already identified, with the precision of someone casing a house before a robbery, that the only asset in the family large enough and clean enough to qualify was sitting on Maple Grove Lane with my name on the deed. I didn't know that yet in November. I found it out in March, on a Tuesday evening, at my own kitchen table, over a manila folder Vanessa had clearly rehearsed handing me. That's where this story really starts. Stay with me. March, a Tuesday evening. Derek and Vanessa came over for what Vanessa called family dinner, though she'd texted ahead asking if we could talk business after. I made pot roast. Gordon set the table. Our granddaughter wasn't born yet, Derek and Vanessa were still a year out from that, so it was just the 4 of us, which in hindsight made it easier for Vanessa to run her pitch without distraction. She waited until the plates were cleared. Then she reached into a tote bag and pulled out a navy folder with pulse iron embossed on the front in gold foil. The kind of folder you order online in a batch of 50 when you're trying to look established before you are. We wanted to show you the plan properly, she said. Not just talk about it. Derek didn't say much. He sat beside her with his hands folded, nodding along the way a man nods when he's already agreed to something and is hoping his mother will simply agree too, quickly, so the evening can end without tension. I noticed that first. Not the folder. My son's silence. Vanessa walked us through it. A 2,400 square foot space in the old Fenmore Hardware building downtown, empty for 3 years, landlord eager to fill it. Build-out costs, equipment, initial marketing, 6 months of operating reserve. Total ask, $275,000, structured as an SBA 7A loan through a regional lender, Coastal Fidelity Bank, a name I didn't recognize, which itself told me something, since I know every bank that does SBA lending within 80 miles of here. The bank needs a guarantor with strong credit and collateral, Vanessa said. Since Derek's business assets are already tied up, and my credit's still recovering from some stuff a few years back, she said this lightly, like it was a parking ticket and not, as I'd learn later, 2 charged-off credit cards and a repossessed car. They suggested a cosigner. We were hoping you and Dad would consider it. You'd be securing it against the house, but it's really just a formality. The projections are strong. She slid me a page. Year 1 revenue projection, $410,000. Year 2, $612,000. I read business projections for 3 decades. A brand new boutique fitness studio in a town of 11,000 people, with 0 existing client base, doesn't do $410,000 in year 1. I've seen established studios in cities 4 times our size not hit that number in year 3. I looked at the number the way you look at a stranger who's just told you an obviously impossible story with a completely straight face. Not with anger. With attention. Where did this revenue projection come from? I asked. Level voice. The same voice I used for 32 years asking a nervous business owner where a number came from before I decided whether to believe the rest of the page. Our consultant put it together, Vanessa said. Marcus. He's helped a bunch of studios like this get off the ground. He does our equipment sourcing too, actually, which saved us a ton versus retail pricing. I want you to remember that name. Marcus. It's the second name that mattered that night. The first was $275,000. The third, though I didn't know it yet, was Apex. I flipped to the equipment page. A leasing arrangement, $184,000 in strength equipment, recovery tools, and studio infrastructure, sourced through a company called Apex Fitness Solutions LLC. I'd underwritten equipment financing for restaurants, salons, auto shops, dozens of small studios over the years. I know, roughly, what commercial-grade strength equipment costs. $184,000 for a 2,400 square foot build-out was high. Not impossible. High. Who's Apex? I asked. Marcus's company, Vanessa said. Well, a company he works with closely. They handle equipment sourcing and leasing for a bunch of the studios he consults for. It's actually a great deal. They front-load the leasing into the loan so we don't have separate monthly payments on top of the mortgage on the loan. I heard the word mortgage and I heard the word Apex and I felt the familiar click I used to feel at my desk at Heritage Trust when 2 numbers that should have matched, didn't. Nothing dramatic. No alarm bells. Just a quiet, professional itch at the back of my skull that says, look closer at this one. I didn't say any of that at the table. 32 years of underwriting teaches you the same lesson 30 years of raising a child teaches you. You don't confront a story in the middle of the telling. You let it finish. You write down what doesn't add up. You go check it later, quietly, where nobody can rehearse a different answer before you get there. I'll need a few days, I said. I want to read the full package properly, not just the summary pages. That's not a no. That's just how I've always done it. Vanessa's smile held, but something behind her eyes recalibrated. Derek looked relieved, the relief of a man who expected worse. Gordon, beside me, said nothing at all, which is Gordon's version of taking very careful notes. They left around 9. I stood at the sink doing dishes I didn't need to do yet, and Gordon came and stood next to me with a dish towel he wasn't really using either. "What did you see?" he said. Not a question. 41 years married to a lone underwriter, he's learned to skip straight past whether I saw something. A revenue projection that isn't real, I said. An equipment invoice that's high. And a consultant who happens to own the company selling them the equipment he's telling them to buy. Gordon set the towel down. That's not a business plan, he said. That's a conflict of interest wearing a business plan as a costume. I know, I said. I want to be sure before I say it out loud to our son. I called Rita the next morning. Rita Alvarez and I worked together for 22 years. She ran the Millbrook South branch while I sat on the commercial side, and more than once she caught something in a walk-in customer's story that I later confirmed with hard numbers. She retired a year after I did. These days she does part-time consulting for 2 credit unions and spends the rest of her time restoring a 1974 camper with her husband. She still has instincts sharper than half the compliance officers currently working. Rita, I said. I need you to look at something with me. Off the books. My son's business, sort of. Bring coffee, she said. And bring whatever paperwork they gave you. Don't summarize it to me. I want to see the actual pages. We sat at her kitchen table 2 days later, the navy folder spread out between us, and Rita read the way she always read, slowly, silently, one finger tracking down each column, occasionally circling a number with a pencil she still carries in her cardigan pocket out of decades of habit. This revenue projection is fiction, she said finally. Not optimistic. Fiction. Nobody hits this in year 1 without an existing client base. And even studios that migrate an existing client base from somewhere else don't hit this. Who wrote it? A consultant named Marcus. Also sources the equipment. Rita looked up. Through his own company? That's what my daughter-in-law said. Rita set the pencil down entirely, which for Rita is the equivalent of another person standing up and pacing the room. Eleanor. In 22 years, how many times did we see a consultant also be the equipment vendor on the same deal? Twice, I said. Both times it was a kickback structure. Inflated invoice, difference split between the consultant and the borrower, off the books. So what are we going to do about the third time? Rita said. It wasn't a question either. That afternoon, Rita pulled up the Ohio Secretary of State's business filing database on her laptop, the same public tool either of us used 1,000 times at our old desks to verify a vendor actually existed as a legitimate registered entity before a loan closed. She typed in Apex Fitness Solutions LLC. One result. Registered 14 months earlier. Registered agent, Diane Reyes. Same last name as Marcus. Mother, maybe, Rita said. Or a sister. Or a wife he hasn't mentioned yet. She clicked through to the filing address, a residential address in the next county over, not a warehouse, not a showroom, not anything resembling a business that sources and delivers $180,000 of commercial fitness equipment. This is a shell, Rita said. Or close enough to one that it doesn't matter which word we use. I want to pause here, because I think it's important you understand I did not go looking for a villain that day. I went looking for the truth, because that is what I trained myself to do for 32 years, and because the last thing I wanted, genuinely, was to find something ugly sitting inside my son's marriage. I would have been thrilled to be wrong. I would have gladly apologized to Vanessa, signed the cosigner paperwork, and never mentioned any of it again. That is not what happened. The deeper Rita and I looked, the further from wrong I turned out to be. Let me tell you about Marcus Reyes, because understanding him matters as much as understanding Vanessa. Nobody builds a scheme like this alone, and nobody falls into one without a reason either. Marcus, 38, self-styled fitness business growth consultant, no formal credentials that Rita or I could find, no certifications, no verifiable client list beyond a handful of small studios that had quietly closed within 18 months of opening. Rita found 3 of them, all in different counties, all with nearly identical stories once you read the public dissolution filings: a boutique studio or recovery lounge, funded through a guarantor's collateral, financed through an equipment vendor with a residential registration address, closed within a year to 18 months of opening. Marcus's name never appeared on any of the loan documents for those studios either. He never signs anything himself. He builds the projections, he arranges the vendor, and he lets somebody else's signature carry the risk. It is, I'll admit, an almost elegant piece of financial choreography, in the same way a pickpocket's hands can look elegant right up until you understand what they're actually doing. He met Vanessa at a regional fitness industry conference roughly 2 years ago, back when Pulse Iron was still a name on a vision board and a folder of inspiration photos on her phone. He told her he could help her get funded the smart way. What that meant, we'd learn, was, identify a family member with clean credit and real collateral, build a projection aggressive enough to justify a large loan, and route as much of that loan as possible through Apex, where he and Vanessa could split the inflated margin in cash before the studio ever opened its doors. It's a formula. He'd apparently run it, in one shape or another, at least 3 times before he ever sat across from my daughter-in-law at a conference hotel bar and told her, I imagine, that she had exactly the kind of ambition this industry needed. I don't think Vanessa was his first choice of borrower's family, if I'm honest about what the pattern suggests. I think she was simply the one who kept saying yes, for 18 months, long after a more cautious person would have asked why her consultant needed to also be her equipment vendor, and why that vendor happened to share his mother's home address instead of a warehouse. The genuinely painful part, the part one didn't want to be true, is that somewhere in those 18 months of consulting calls and industry conferences and late-night text threads about equipment vendors and financing structures, Marcus and Vanessa became something closer than consultant and client. I don't say that to be cruel to my son by repeating it here. I say it because it's the piece that explains everything else, why the projections were built to justify the largest possible loan rather than a sustainable one, why the equipment was sourced through a company that could quietly pay Marcus back for his time in a currency other than an invoice, why Vanessa was, from the very beginning, thinking less about opening a studio and more about what came after it, one way or another, closed. 10 days into our investigation, Rita found the piece that turned an uncomfortable suspicion into something else entirely. She'd been cross-referencing invoice line items against wholesale equipment catalogs, the way we used to verify equipment financing deals at the bank, checking model numbers, checking manufacturer list pricing, checking whether the commercial-grade descriptions matched what was actually being billed. Of the $184,000 in equipment listed on the Apex invoice, Rita calculated actual wholesale cost, generously, at around $61,000. The gap, $123,000, had nowhere real to go. It wasn't installation. It wasn't delivery. It wasn't tax. It was simply invoice, dressed up in line items vague enough to survive a glance but not a real one. $123,000, Rita said, laying the comparison sheet in front of me. Financed against your house, and it evaporates into a company registered to Marcus's mother the moment the loan funds. I sat with that number for a long moment. It's not an abstraction to me. I know precisely what 123,000 buys and precisely what it takes to earn it honestly, because I spent 3 decades watching honest people earn exactly that much $1 at a time. I need to know what happens after the loan funds, I said. If the studio's real projections are fiction, what's the actual plan? Because nobody builds a scheme this careful just to watch a business fail by accident. That question took another 3 weeks to answer. Stay with me. I started paying closer attention after that dinner, the way I used to pay closer attention to a file once I'd found the first inconsistency, not obviously, not with any change in how I treated Vanessa at family gatherings, but carefully, the way you watch a column of numbers for the next error once you've found the first one, because errors, like liars, are rarely alone. Derek came by on a Saturday in April to help Gordon clear gutters, and I made the two of them lunch, and somewhere between the latter and the sandwiches, he mentioned, almost offhand, that Vanessa had been stressed about timing on the loan. Timing for what? I asked. The lease on the Fenmore building. Landlord wants a signed lease and a funded loan by June or he's putting it back on the market. And there's some kind of window with the equipment financing too. Marcus said if we don't lock in the vendor pricing by a certain date, it goes up. I filed that away. Urgency is one of the oldest tools in a con artist's kit. I taught seminars on it at the bank, actually, years ago, to junior loan officers. The borrower who needs you to move fast is either legitimately time-pressured, which happens, or is trying to get your signature on a document before you've had time to read it properly. I told those junior officers the same thing every year. Slow down exactly when someone is telling you to hurry up. The following week, I asked Derek, gently, if I could see the full loan package Coastal Fidelity had put together, not the summary folder Vanessa had shown us, the actual underwriting file, the kind of documentation a real lender requires. He didn't have it. Vanessa handled all the paperwork side, he said, because she was better with the details. I noted that too. In 32 years, I never once saw a legitimate small business loan where one spouse was deliberately kept away from the actual documentation. Partners hide bad news from each other. They rarely hide good news. I called Coastal Fidelity Bank directly, using my old credentials as a courtesy. Bankers still tend to talk to other bankers, even retired ones, a little more openly than they'll talk to a nervous parent. I got a loan processor named Yolanda on the phone, told her I was the proposed guarantor doing my own due diligence before signing, which was true, and asked a few specific underwriting questions. What I learned troubled me more than the shell company had. I asked Yolanda a handful of the same questions I used to ask junior underwriters to run through on every file, back when I was training them myself. What was the debt service coverage ratio on the projected numbers? Had anyone independently verified the revenue projections against comparable businesses in the region, or had they simply accepted the borrower's own figures? Was the equipment vendor a UCC-filed, arm's-length third party, or had anyone checked for a relationship between the vendor and the borrowing party? Yolanda answered the first 2 questions competently enough. On the third, she paused long enough that I knew, before she even said it, that the answer was no. Nobody had checked. In 32 years, checking that exact relationship was the very first thing I taught every new hire in my department, because it is, without exception, the single most common vector for fraud in small business equipment financing. It is underwriting 101. Coastal Fidelity had skipped it entirely, because skipping it let them close more loans, faster, with less liability sitting on their own books once the guarantor's collateral was standing behind the whole arrangement instead. Coastal Fidelity wasn't a traditional SBA lender at all. It was what's sometimes politely called an alternative commercial lender, higher rates, looser underwriting standards, willing to fund deals that a bank like the one I spent 32 years at would never have approved, precisely because they were relying almost entirely on the strength of the guarantor's collateral rather than the underlying business fundamentals. In other words, Coastal Fidelity didn't much care whether Pulse Iron ever made a dollar. They cared that a paid-off house in Millbrook, Ohio was standing behind the loan. If the business failed, they weren't the ones who lost. I was. That's the part that finally made the shape of the whole thing visible to me, the way a shadow finally resolves into a recognizable object once you've looked at it from the right angle. This was never really a loan for a business. It was a mechanism for converting my house into cash, legally, with my own signature on the document that made it possible. If the studio opened and limped along for a year, that was fine. Marcus and Vanessa had already extracted their $123,000 the moment the loan funded, regardless of what happened after. If the studio failed within 18 months, which every honest projection I could build said it would, Coastal Fidelity would come after the guarantor. Not Derek's landscaping business, which had no meaningful assets pledged. Me. My house. The one thing in this family that had never once had a bank's name on it in 11 years. And somewhere in that failure, I began to understand, was where Vanessa's real plan lived. Not a business. An exit. A studio that existed on paper long enough to generate a payout, attached to a marriage she may well have already been planning to leave, with a man who'd been consulting her toward the door the entire time. I want to be careful here, because I don't have a signed confession of that last part, and I never got one, not fully. What I have is a pattern, and 32 years taught me that patterns are usually more honest than people. I called Howard Klein next. Howard's an attorney I've known since he was fresh out of law school doing closings for the bank, 30 years ago. He's semi-retired now, mostly handles estate work and the occasional favor for old friends. I asked him to review everything Rita and I had assembled. He read through it at his kitchen table with the same silent, methodical attention Rita had. When he finished, he took his glasses off and rubbed the bridge of his nose, which I'd learned over 30 years was Howard's version of the sound a smoke detector makes. "Eleanor," he said, "if you sign this guarantee, you are personally and legally responsible for $275,000, secured against your home, in a deal where $123,000 of that money has no legitimate purpose I can identify beyond enriching a vendor with an undisclosed relationship to the borrower. If this business fails, and based on these projections, it will, Coastal Fidelity forecloses on your house to recover their money. Not Derek's business. Your house." "I know," I said. "Do you also know," Howard said, "that what you're describing, an undisclosed kickback arrangement between a consultant and a shell vendor, built into a loan application submitted to a federally adjacent lending program, isn't just a bad business deal? Depending on how this was represented to Coastal Fidelity, this could constitute loan fraud. Federal, if any SBA guarantee is actually attached to it, which their marketing materials imply even if the underwriting doesn't match SBA standards." I sat with that for a long moment. "I don't want to send my daughter-in-law to prison, Howard. I want my son to understand what he's standing next to before it takes the roof off his house." "Then you need proof of the relationship," Howard said. "Not just the shell company. Proof that Marcus and Vanessa built this projection together, knowing it was false, and proof of what's actually happening between them, because that's what's going to make your son believe any of this instead of dismissing it as his mother being suspicious of his wife." I already had a guess about where that proof might be sitting. Vanessa had been using the family iPad, the one Derek kept in the kitchen for grocery lists and recipes, the one that happened to share an iCloud photo stream with Derek's phone because they'd set it up together, carelessly, years earlier, back when there was nothing either of them needed to hide from each other yet. I'm not proud of what I did next, and I'm not going to pretend it sat easily with me. But I'd spent 32 years believing that documentation, gathered carefully and legally, protects people, and that going in blind protects no one. Derek had, months earlier, given us the passcode to that shared iPad so we could watch our future grandchild's ultrasound photos the moment they came in. I used it exactly once, on a Sunday afternoon while Derek and Vanessa were at a cookout, to look at the shared photo stream for images and screenshots relevant to the loan, nothing more, nothing I wasn't already entitled to see as the person being asked to guarantee $250,000 of debt. What I found wasn't a photograph. It was a screenshot Vanessa had apparently saved and then, mistakenly, never deleted from a synced folder, a text exchange with Marcus from 6 weeks earlier. Once the loan funds were clear on our end within 30 days. Studio doesn't even have to make it to year 2 for us to be fine. Marcus. I know. I just need Eleanor to sign. Derek won't ask questions if she's already comfortable with it. Vanessa. I stood in my son's kitchen holding that iPad with both hands the way you hold something that might shatter if you move too fast. My son won't ask questions if his mother's already comfortable with it. Not a business partner. A shield. That was my role in this. Not guarantor. Cover. I photographed the screen with my own phone, put the iPad back exactly where I found it, and drove home in a silence I don't think I've felt since the day the bank called to tell me Heritage Trust was merging with a larger institution and half my department would be let go. That kind of silence, the kind where your hands know what to do even though the rest of you hasn't caught up yet. Gordon was in the garden when I got home. I sat down on the porch step and told him everything, start to finish, and my husband, steady, quiet, 41 years of never once raising his voice at me, put his trowel down in the dirt and said something I will remember for the rest of my life. Then we're not signing anything, he said. And we're not letting our son find out about this from a foreclosure notice. I contacted Howard again the next morning and told him what I'd found. He was careful with me about the iPad, told me, honestly, that anything obtained that way needed to be handled delicately, that it might not be admissible in a formal proceeding depending on how we used it, but that it was more than enough, paired with everything else, to know precisely what we were dealing with, and precisely how to bring it to my son in a way he couldn't wave away. You don't need it to win in court, Eleanor, Howard said. You need it to win at your own dinner table. That's a different bar entirely, and you clear it easily. We spent the next 2 weeks building what I started, out of old habit, to call the file. Rita and I organized it the way I organized every commercial loan file for 32 years, tabbed, chronological, every claim backed by a document, nothing asserted that couldn't be shown. Tab 1, the original pulse iron projection pages, alongside Rita's line-by-line rebuttal, industry comparables included, showing the year 1 revenue figure was not aggressive but fictional. Tab 2, the Apex Fitness Solutions invoice, alongside Rita's wholesale cost comparison, showing the $123,000 gap with nowhere legitimate to go. Tab 3, the Ohio Secretary of State filing for Apex, showing Diane Reyes, Marcus's mother, we'd since confirmed through public records, as registered agent at a residential address. Tab 4, Howard's summary memo explaining, in plain language, the legal exposure I'd take on as guarantor, and the questions the structure raised about how the deal had actually been represented to Coastal Fidelity. Tab 5, the text exchange. I debated including it until the very last night before I closed the folder. In the end, I decided a family deserves the whole truth delivered once, carefully, rather than a partial truth delivered twice. Howard came to the house the evening before I planned to speak with Derek and Vanessa, and we went through the entire file one final time at my kitchen table, the same table where Vanessa had first slid that navy folder toward me 2 months earlier. "You've built a stronger file than half the closings I handled in 30 years, Howard said. "I mean that as a compliment and a small tragedy at the same time." "I had good training," I said. "I just never expected to use it on my own family." "Nobody does," Howard said. "That's usually exactly when it matters most." I invited Derek and Vanessa to dinner the following Sunday. I told them, honestly, that I'd finished reviewing the loan package and wanted to talk it through as a family before making a decision. I made a roast, the way I always do for Sunday dinner, and I set the table with the good plates, and I did not, this time, wait until dessert. They arrived at 6. Vanessa wore the same confident, easy smile she'd worn in March, the smile of a woman who'd already decided how this conversation would go. Derek looked tired in a way that had nothing to do with landscaping season. I've watched my son's face for 34 years. I know exhaustion from stress when I see it sitting behind his eyes, even when he doesn't have words for it yet himself. We ate. We talked about ordinary things, the weather, a client of Derek's whose retaining wall had finally been finished, Vanessa's plans for the studio's opening event. I let the meal breathe the way I always let a meeting breathe before the real business of it begins, because you learn, underwriting loans for 3 decades, that people say truer things once they've eaten, once their guard has settled a notch, once they believe the hard part is already behind them. When the plates were cleared, I set a navy folder of my own on the table. Not the one Vanessa had given me in March. My own, tabbed, 5 sections, built the way I built every serious file of my career. "I've made a decision about the loan," I said. "I want to walk you both through exactly how I got there, because you deserve to see the whole picture, not just the answer." Vanessa's smile didn't move, but something behind it did, the same recalibration I'd seen at that first dinner in March. Derek sat up a little straighter. "Mom, if it's a no, that's fine, we can find another way." "It's not that simple," I said. "Let me show you what I found." I opened to tab 1. "Vanessa, this is the revenue projection Marcus prepared for Cosign. $410,000 in year 1. I set Rita's comparison sheet beside it. "This is what comparable boutique studios in towns our size actually generate in year 1, according to industry data and 3 separate studios I called directly to verify. The highest of those 3 did $130,000. Your projection isn't optimistic. It's fiction, built to justify a loan size the actual business could never support." "Every new business projects optimistically," Vanessa said, voice light, rehearsed sounding in a way I recognized from 32 years of sitting across from people defending numbers that didn't hold up. "That's how you get lenders excited." "I spent 32 years being the lender on the other side of that table," I said. "I know the difference between optimistic and false." "This is false." I turned to tab 2. "This is the equipment invoice from Apex Fitness Solutions. $184,000. Here's what the actual wholesale cost of that equipment runs, verified against 3 manufacturer catalogs." I laid Rita's sheet beside it. $123,000 of this invoice has no legitimate destination. It isn't installation. It isn't delivery. It isn't tax. It's simply gone, the moment the loan funds, into a company called Apex." Derek leaned forward, reading the comparison himself now, his jaw beginning to tighten in a way I hadn't seen since he was a teenager caught in a lie he thought was airtight. "Who owns Apex?" he asked. Quiet. Careful. A question he already suspected the answer to and didn't want confirmed. I turned to tab 3. Apex Fitness Solutions LLC. Registered 14 months ago. Registered agent, Diane Reyes. I let that sit half a second. Marcus's mother. The table went silent the way rooms go silent when a story finally lines up into a shape nobody wants to look at directly. Vanessa's face had gone very still. Marcus works with a lot of vendors, Vanessa said. I don't know the details of every business relationship he has. You told us, at this exact table in March, that Apex was a great deal because Marcus sources equipment for the studios he consults for, I said. That's not somebody else's business relationship, Vanessa. That's the man building your loan application, also owning the company, profiting from it. Derek looked at his wife. Did you know that? Vanessa didn't answer right away, which was, itself, an answer. I turned to tab 4. This is a legal memo from Howard Klein, who's known this family for 30 years and reviewed everything Rita and I found. In plain terms, he told me that if I sign this guarantee, I take on personal legal responsibility for $275,000, secured against this house, in a loan built on numbers that don't hold up and an equipment invoice built to enrich an undisclosed party. If the business fails, which every honest projection says it will, likely within 18 months, the lender forecloses on my home. Not your landscaping business, Derek. My house. The one your father and I paid off 11 years ago. Mom, I didn't know it was structured like that, Derek said, and I believed him completely. I thought, Vanessa said, the collateral thing was just a formality. It was never a formality, I said. It was the entire point. I turned to the last tab. My hands were steady. I'd rehearsed this part more than any other, not because the words were hard to say, but because I needed to say them without cruelty, even though what they described was cruel. This is a text message exchange between Vanessa and Marcus, from 6 weeks ago. I read it aloud, level, the way I once read closing disclosures to nervous first-time business owners, clearly, without embellishment, letting the words carry their own weight. Once the loan funds, we're clear on our end within 30 days. Studio doesn't even have to make it to year 2 for us to be fine. I know. I just need Eleanor to sign. Derek won't ask questions if she's already comfortable with it. Derek didn't move for a long moment. Then he turned to Vanessa, and I watched something in my son's face I had genuinely never seen before, not once in 34 years, not anger, exactly. Recognition. The specific, devastating recognition of a man realizing the story he's been living inside was never the one he thought it was. We're clear on our end, he repeated, quietly. You and Marcus. Derek, it's not what it. Don't, Derek said. Just that. His voice didn't rise. It didn't need to. Vanessa's composure finally broke, the way I'd seen composure break across a desk 100 times in 32 years, once the evidence stopped leaving room for a better version of events. You don't understand what it's like, she said, to me now, not Derek. I grew up watching my mom work a register for 26 years and get nothing for it. Nothing. I was never going to live like that. Marcus showed me a way to actually build something, and you're sitting here with a paid-off house acting like wanting more than what I grew up with is some kind of crime. Wanting more isn't the crime, Vanessa, I said. I understand wanting more better than you think. I built a career out of it. The crime is building a fake business to launder my house into cash, and using my own son as the reason I wouldn't ask questions. It wasn't going to hurt him, Vanessa said. The studio was real. I was going to run it. For how long? I said. Until the money from Apex cleared? Until you and Marcus decided you were clear on your end? I've read 100 failed business plans in my career, Vanessa. I have never once read one where the owner had already privately confirmed with her supplier, in writing, exactly how long the business needed to survive before she personally didn't care anymore whether it did. The dining room was quiet in the particular way a room goes quiet after the last piece of a puzzle locks into place and nobody at the table can pretend any longer they're looking at something else. I closed the folder. Here's where I've landed. I am not signing this guarantee. Not this version of it, not any version connected to Apex or to Marcus Reyes in any capacity. If you want to pursue this studio honestly, real vendors, real projections, real numbers, I will sit down with you and help you build a loan package that a legitimate bank would actually approve on its own merits. That offer is genuine. But it does not include financing $123,000 into a company owned by your mother-in-law, Marcus. Vanessa flinched at hearing her connection to Diane Reyes stated so plainly. And Derek, I said, turning to my son, keeping my voice as gentle as I could manage while still saying something true, I'm not going to tell you what to do with your marriage. That's not my place, and it never will be. But I needed you to see the whole file before you made any decision about anything, because I wasn't willing to let you find out about any of this from a foreclosure notice on your parents' house, or from Marcus and Vanessa quietly not being around anymore once the money moved. Derek sat very still for a long moment, staring at the tabbed folder in front of him, at the projection sheet, at the invoice, at the LLC filing, at the printed text message, at all of it laid out the way I'd laid out 100 closing files for clients who needed to see, in black and white, exactly what they were agreeing to before they signed. I want to see everything, he said finally. Quiet. Steady, in a way I hadn't heard from him in months. All of it. Every page. It's yours to keep, I said. Every page of it. Vanessa stood up so fast her chair scraped hard against the floor. This is insane. You're all acting like I planned some kind of heist. I wanted to open a business. You wanted an exit with a payout attached to it, I said, still level, still not raising my voice, because I'd learned decades ago that the person raising their voice in a room like this one has usually already lost the argument. Whether you'd have admitted that to yourself is a question I can't answer for you. But the paperwork doesn't lie, even when the people holding it do. You knew the projection was fake, Derek said slowly, working through it out loud the way he used to work through a math problem at the kitchen table as a boy, one careful step at a time. You knew Marcus owned Apex. You knew my mother's house was the only reason any of this could happen at all. And you let me sit in every one of those planning conversations thinking we were building something together. We were building something together, Vanessa said, and for one moment I believed she genuinely thought that was true, or needed it to be. I wanted the studio to work, Derek. I wanted all of it to be real. But you didn't need it to be, I said quietly. That's the part in the message, Vanessa. Not that you wanted it to fail. That you'd already made peace with it failing, because you and Marcus would already be finished with it by then. Wanting something to succeed and structuring it so you don't care if it doesn't, those aren't the same wish. I read files like this for 32 years. The people who genuinely believe in their business build it to survive. You built this one to be survived. Vanessa's eyes went bright and hard, the particular brightness of someone who has run out of a better version of the story to reach for. You don't know what it's like to want out of a life and not have a single door that isn't locked, she said. Marcus was a door. Then you should have walked through it honestly, Gordon said, speaking for the first time since I'd opened the folder, his voice quiet but absolutely unshaken. Nobody in this family would have stopped you from leaving, Vanessa. We'd have been sad. We'd have survived it. What we won't survive quietly is watching you leave with $123,000 of our house folded into your coat pocket on the way out." She looked around the table, at Gordon, at me, at Derek, at the folder, the way I imagine a woman looks when she finally understands that the room has already decided something without her, and that no performance left in her is going to change the verdict. She looked at Derek, waiting, I think, for him to defend her the way he'd defended her, quietly and by omission, for 5 years. He didn't. He just looked back at her, and something in his face had gone very final. "I need you to leave," Derek said. Not shouting. Not dramatic. Just done. Tonight. I need some time. Away from you, away from Marcus, away from all of it. Vanessa left without another word, her heels sharp against the front hallway floor, the door closing hard enough to rattle the frame but not hard enough to be called a slam. Through the front window, I watched her sit in her car in our driveway for almost 4 full minutes before she finally started the engine and drove away. Derek stayed at the table a long time after that, both hands flat on the closed folder the way a man rests his hands on something he's afraid to open again and afraid to let go of at the same time. "How long did you know?" he asked, finally. "Almost since the first night, that something wasn't right with the numbers," I said. It took another 2 months to understand exactly how wrong, and who it was wrong for. "Why didn't you tell me sooner?" "Because I needed to bring you a file, Derek, not a suspicion," I said. A mother's suspicion about her son's wife is the easiest thing in the world to dismiss. A commercial loan file with 32 years of underwriting behind it is a great deal harder to argue with. "I needed you to believe this because of what was on the page, not because of who your mother is." He nodded slowly, and something in his shoulders finally came down from wherever they'd been holding for months. "Stay with me. This is where it starts to resolve." In the weeks that followed, Derek moved forward with a formal separation. Howard referred him to a family law attorney with experience in cases involving hidden financial arrangements, and the file Rita and I had built, every tab, every comparison, every filing, became the backbone of both the divorce proceeding and, eventually, a report Howard helped Derek file with Coastal Fidelity's compliance department, since the loan application Vanessa and Marcus had submitted materially misrepresented the nature of the vendor relationship, which turned out to matter a great deal once actual bank compliance officers, rather than family members at a dinner table, started reading it. Coastal Fidelity quietly withdrew the loan offer within a week of receiving Howard's letter. I later learned, through Rita, who still has better ears in the local lending world than most people currently working in it, that Coastal Fidelity had flagged Apex Fitness Solutions for review on 2 other pending deals as well, once our documentation gave them a reason to look. I don't know exactly what became of those files, whether those families ever learned how close they'd come to the same arrangement we walked away from, but I do know that a compliance officer named Preston, whom Howard spoke with twice, told him our documentation was more thorough than anything their own underwriting team had produced on the file to date, which is a polite professional way of saying that a retired branch manager, a retired CPA, a semi-retired attorney, and a retired SVP of commercial lending had, between the 4 of us, done the job a licensed lender was supposed to have done and hadn't bothered with. I know that Marcus Reyes's name doesn't show up on any current business filings in Ohio anymore. Rita checked, out of the same habit that made her a good branch manager for 22 years, the kind of habit that doesn't retire even when the person carrying it does. Some people don't disappear. They just relocate the paperwork somewhere harder to find, and start the same conversation over with someone new, in a state where nobody's mother used to run a commercial lending desk. I think about the studios he left behind sometimes, the 3 Rita found in the public dissolution filings, and however many more exist that never made it into a database either of us could search. Somewhere out there are other families who signed a guarantee the way I almost signed mine, who are still making payments on equipment that was never worth what the invoice said, on a business that was never built to survive past the year its purpose had already been served. I think about them more than I expected to. It's a strange kind of grief, grieving for strangers whose names you'll never know, simply because you finally understand, in specific and personal detail, exactly what happened to them. Vanessa moved in with a friend in Dayton within a month, close, I suspect, to wherever Marcus landed, though Derek never asked and I never pushed him to find out. The divorce finalized 6 months later. Ohio being an equitable distribution state, and the marriage having produced no shared major assets besides a modest condo Derek had owned before the marriage anyway, it resolved with less bitterness on paper than I expected, given everything underneath it. Derek kept the condo. Vanessa kept her car, her share of the retirement account contributions from her time working the gym front desks, and, I imagine, whatever version of this story she's telling herself and Marcus now, wherever they landed. Our granddaughter, Josie, was born 8 months after that Sunday dinner, not Vanessa's child. Derek met someone new the following spring, a physical therapist named Renee who runs actual, honest small group training sessions out of a real studio she built slowly, over 3 years, with her own savings and a modest, entirely legitimate loan from a bank 2 towns over that I did not underwrite and had absolutely nothing to do with, though I'll admit I quietly pulled the public loan filing once, just to satisfy my own professional curiosity, and found nothing but clean numbers and a realistic 5-year growth plan. Old habits. Derek and Renee married 2 years after that dinner. I keep Josie on Wednesdays, the way grandmothers do, and I've started teaching her, at 4 years old, to count, real counting, not memorized numbers, actual counting, the kind where you touch each object once and understand what the total means. Gordon says I'm going to turn her into an underwriter before she's out of kindergarten. I tell him there are worse things a person can grow up to be. Rita and I still meet for coffee most Tuesdays. She finished restoring that 1974 camper last summer, and she and her husband took it out to the Smokies for 3 weeks. She sent me a postcard that just said, "No fraudulent equipment invoices out here. Just mountains. Miss the work a little. Miss you more." I keep it on the refrigerator, held up by a magnet shaped like a tiny filing cabinet that Derek bought me as a joke the Christmas after everything happened. It's not really a joke. It's the truest gift anyone gave me that year. Howard still does the occasional favor for old friends. He tells people, when he thinks I'm not in earshot, that the pulse iron file was the cleanest piece of documentation anyone had ever handed him without a law degree attached to the person holding it. I did have good training. I just never expected to spend it protecting my own front door. Gordon still does the crossword every morning, the real newspaper, and some mornings now Josie sits across from him with her own little pad of paper, scribbling numbers she's decided are very important, and Gordon plays along completely straight-faced, the way only a man who spent 41 years as a CPA can manage to play along with a 4-year-old's imaginary spreadsheet. Last month she handed him a page covered in wobbly circles and declared it the budget. Gordon studied it for a full minute, nodded gravely, and told her the numbers looked strong but he'd want to see her assumptions before he signed off. She's 4. I don't think she understood a word of it. She understood the seriousness in his voice, though, and that, I've come to believe, is where these things actually start. Derek took almost a full year before he told me, one evening over coffee at my kitchen table, what that Sunday dinner had actually done to him beneath the surface, past the anger and the paperwork and the lawyers. "I keep thinking about how easy it would have been for you to just sign it," he said. You could have decided it wasn't your business to look that closely. A lot of parents would have. A lot of parents don't know how to look, I told him. I did. That's not virtue, Derek. That's just what 32 years leaves you with. I'd have felt like I'd failed everything I ever did for a living if I signed something I hadn't actually read. I used to think you were being hard on Vanessa when you asked for the actual paperwork instead of just trusting the summary, he admitted. I thought, Mom, just let it be easy for once. I understand now that letting it be easy would have cost us the house. I think about that conversation often. Somewhere underneath 32 years of reading balance sheets, I raised a son who is, at his core, a gentle and trusting man, the same way his father is, and I have never once wished that part of him away, even now, even knowing what trust without verification nearly cost this family. I simply wanted him to understand that gentleness and vigilance aren't opposites. You can love people with your whole heart and still ask to see the actual invoice. I think about that Tuesday evening in March sometimes, the navy folder with the gold foil lettering, the confident smile across my kitchen table, the $410,000 that never once had a chance of being real. I think about how close I came to signing it anyway, simply because it was my son sitting beside her, nodding, wanting so badly for the evening to end without conflict. I think about how many families never get the 4 seconds I got that night, the trained, professional instinct to look at a number and know, immediately, that the story around it doesn't hold weight. Not everyone spent 32 years learning to read a balance sheet the way I did. But everyone can learn the one lesson underneath all of it, the lesson that has nothing to do with banking at all. When someone hands you a folder and tells you to hurry, slow down. When someone else's plan requires you not asking questions, ask them anyway. And when the story and the numbers don't match, believe the numbers. Numbers don't have anything to gain by lying to you. People sometimes do. My name is Eleanor Voss. I spent 32 years underwriting other people's dreams, deciding, one file at a time, which ones were built to last and which ones were built to fail on somebody else's collateral. I never expected the most important file of my career to be built at my own kitchen table, defending my own front door, for my own son. But that's the thing about training like mine. It doesn't retire when you do. It just waits, quietly, for the day your family needs it most. If you've ever been asked to sign something that felt wrong before you even understood why, trust that feeling. Go find the 4 seconds. They might save the whole house. Thank you for staying with me. If this reminded you to read the fine print before you sign anything for the people you love, drop a comment and let me know. Subscribe to Gia Mom Stories for more, and remember, the numbers will tell you the truth long before the people do.